Good day, traders. 1 minute mindset reset. More snow in what has normally been sunny southern Canada. So today we're talking about where to take profits or when to take profits. So an excellent question from a trader. We got all kinds of stuff happening in the markets this week with the Silicon Valley bank collapse. There was a lot of traders messaging asking how that will affect the markets, also asking about how this is part of the new beginning of the reset, how it will affect Forex trading and get rid of the fiat currencies, etc. I don't think about any of that stuff. Oh yeah, and we'll also talk about daylight saving time. So I don't think about I don't worry about whether or not they get rid of fiat currencies. I don't worry if we're going to go to a digital currency. Whatever's going to happen is going to happen. What I focus on is right now just executing and doing my job each day. So just addressing daylight saving time. So in North America, we went ahead by an hour, and year round, no matter what, whether traders agree or disagree, Europe hasn't gone ahead yet, but I stick to New York time. So regardless if you're trading London or Asia, and those time zones haven't changed in terms of their equity market opens, the number one thing is my strategy doesn't change because I'm only looking for setup. So whether that setup happens in the first hour or if it happens an hour later is irrelevant to me. But in the US session, I stick to New York time. And I have an absolute conviction that the algos run on New York time year round anyways. So you might get a trade when London's supposed to open, and you might get it in what is considered a third hour trade. I have no idea, but it doesn't matter if you're, whatever you're trading. If you're in London and you're trading on London equity time, then trade on London equity time. There might be a trade in the first hour because in this overlap, the moves may happen a little bit more varied than normal, but I stick to New York time. Absolutely, without a doubt, I stick to New York time. So this Silicon Valley bank collapse, again, whether that's part of the beginning of the Great Reset or not, this morning we potentially may have had markets that could have opened on huge gaps, which we did see some volatility and gaps in the Asian window. But my go-to strategy whenever there's uncertainty and we get creeping markets or anything like that is low-hanging fruit. Now we saw reversals. Gold was quite strong and gave a low-hanging fruit continuation long trade, but obviously gold can have more volatility. The safe haven currencies, the Japanese yen and the Swiss franc, are always pairs that I will look at whenever there's uncertainty, and I'm not so much looking for counter trend trades. So if there's uncertainty in the markets, or I don't feel confident about the conditions or the type of market cycle that we're trading, I will just look for low-hanging fruit, simple stuff. There were opportunities based on time. So a question from a trader, where do you set your take profit? Well, whenever I'm in a trade like that, you have to remember what low-hanging fruit is. Low-hanging fruit is a trend continuation. So they've put a low of the day in place just heading into the US session. They pump it up for 15 to 30 minutes, major round numbers, and then continue the trend. That new low of the day, which was just below double zeros, essentially to me is double zeros is the low of the day. And we're looking now at 25 to 50 pips outside of the range as a possible area of where that trade can fail. So again, major round numbers. But the most important thing to pay attention to is the time of day. Remember, don't get fixated on where do I put my profit target. It's very clearly defined. Most trades are going to go on the currencies 25 to 50 pips, unless you're on a day 3, first red day, first green day, or a news catalyst type of trade that can go on a range expansion. So 25 to 50 pips in a session at the low of the day when we're heading into the end of the hour. So now we're heading into the end of the hour, and the second hour is about to start, which brings us into the New York equity hour. So New York open 9:30 a.m. is obviously when we can see those reversals. Now wasn't keen on taking those, and I know to me the easy money is the low-hanging fruit. The harder trade is to take the trade in reverse, because remember, I'm looking where can I put size on, and some traders are comfortable to put size on the counter trend trade, but I'm in a broken down market, so I have no idea what those markets are going to do, and I'm not trying to catch a falling knife. They could have very easily had capitulated on some kind of tweet that the bank, they're not going to bail the bank out, or there's a second bank now that's going to collapse, or anything like that. So I'm just looking at low-hanging fruit, the easy trade. Gold gave a second hour reversal after 3 levels of rise above the high of day. So they went another 100 pips above the high of the day in the second hour. The new hours towards the end of that second hour, they lock in 75 and collapse down 100 pips into the open of the third hour. So again, they went up, put a peak formation in, came down on top of the original breakout at the quarter level, gave a little micro M structure. So I never try to just guess where the high is or guess where the low is. I want to see them collapse and then retest. There's always going to be a low-hanging fruit trade of some sort, but gold, again, in a low-hanging fruit trend continuation trade in that first hour, so an easy 50 to 75 pips through the high of the day or more, depending on how long traders held on to it. But in these types of conditions, I nail and bail. I'm going to lock in the money and get off the screen. So I'm not holding on to something to see how far it goes. I'm there to lock in, nail the trade, and bail out with the money in my account. So don't have if you're in the trade, lock in some money. Lock in some money, pay attention to the time decay factor, and understand when you're going in levels of increments, especially on currencies, 25, 50, and you're at the low of the day, that you're now potentially at where this market may be putting in a low and even reversing just back to the high of the session or back to the high of London or something. We saw the S&P put a short squeeze in after a double bottom, and I have no idea where that's gone now, but just not afraid to lock it in and get something out of the trade. So 20 on a currency pair, 25 to 50 is a really good area for locking in the money. So lots of things potentially going to move the markets this week. Be smart, be safe, keep it simple. If you're not sure or you're going to take a trade and there's uncertainty, scale down in size. But if you get a best trade set up and you nail that thing and you have an area to size into as it's blowing off or moving, also lock in the money and then know when to call it a day. So keep it simple, traders. Make sure you get paid. These are potentially uncertain markets, but greater risk, but also lots of greater opportunities. We saw lots of instruments move today in London. Oil moved, right off the high of the day, straight down towards the low of the month, before locking in and giving traders another, I think, 100 pips plus on the way back up in the US window. So plenty of opportunities. Be smart, be safe. 1% better every single day. Keep it going and keep it growing. But trade smart, and may the markets go with you.